All right, welcome back, everyone. Before we take a break, we talk about the sole orders, which is the million-dollar questions that suppliers or hotels will ask about OTAs. So all the answers that we can provide is the content, conversions, guest reviews, rates, all the informations actually was controlled by yourself. Why I'm saying this control by yourself? Because you cannot control guests where they want to go, where they want to stay. They want to stay close to the city. They want to stay at the vacation next to the beach. But what you can control is your products. So you're showing your photos with 100%. You're doing your guest reviews. You're doing your rates together by checking what's the market trends or competitors are. So these are the fundamentals that you make sure you're 100% to be completed with updates. But how can you define how much you'd like to sell? Or how can we benefit or get more profit from OTAs? From the hotel perspective, it's actually go back to the revenue management. I'm sure most hotels have a reservation department, but probably not all of it has a revenue manager or say a revenue management center for it. So I'm going to give you the basic revenue management ideas about how to set up your rates during certain period of time or use this management, a revenue management to acquire the guests you want. Here, revenue management is actually based on the time of the seasonality, based on the need for the hotel, whether it's high season with concerts or with events or sports like Olympics. Then if there's a needs going up, of course, we can uprise the rate. But what if during the time of slow, like right now, COVID-19, you have no guests, what can you do? How do you respond to the other hotels right next to you? This is the way we create a revenue management because now we have more flexibilities to help us to change the rate. By changing the rate, if it goes up, we can have more revenues. But if it goes down, it might acquire more business to get the basic business for the hotel wise. So at this point, how do we set up the rate for it? We start from pricing. For pricing, at the OTA or at the hotel level, we do two models. First, we call it BAR. BAR stands out for Best Available Rate, I mentioned earlier. It also called dynamic rates. It means the same thing that because dynamics that it's like up and down, it's like flexible, it will be able to adjust it. So it might be adjusted or say it might be affected by certain reasons. For saying tomorrow Saturday I'm not doing really well, I want to lower a little bit price to acquire last minute business. So that's when we do it to drop down the rate. Or there's a last minute event like a popular sportsman or say celebrity going to town. I want to upgrade the rate because there are a lot of followers coming to the hotels or near the area. Then we can go up. Most of the time, this pricing model is based on commissions. From the earlier today's session, we talk about OTA's business model for commissions. We talk about Airbnb's commissions level, not just for the hotel or the supplier itself, but also with the hosts or the travelers. But for OTA wise, the commission are only coming from business entity hotels. So either we ranging from 10% to 30%, depends on the model, depends on how deep you're willing to cooperate with this certain OTAs. Remember, we see there's an Agoda preferred partner. I can show you again. Agoda preferred partner is one of their major marketing tools or marketing exposures for hotels to be promoted on their websites. Which is highly important, but they might take more commissions so they have better incomes for it or profit, so they will help you to sell. Agoda prefer. So when you see this sign, you understand that they might be charged higher commissions, but they have a better promotion on the websites, or say the sold orders to be promoted upfront. And these are also controllable by yourself if you're willing to do it. Now, this is the bar or dynamic based on commission levels 10 to 30. FIT, I mentioned earlier, free in travel or net rate is a rate that we provide to the agents that they will be able to add markups to sell. Markup is their profit. I think I also mentioned earlier today. And statistic is also the same term with this term, with the net rate. So once you hear FIT rates, net rates, or statistic rates, they are all means the same thing. And what do they require is the net rate is the clean rate that hotel wants to receive. So I mentioned earlier $100, but I gave to other channels for 80. So the 20% is the markup they will have. So for FIT, they do markups. And for markup percentage or markup amount, depends on the OTA you're working with. Normally, it will goes up from 10 to 15% because that's how a booking generated and to be profitable for it. So the pricing structure will be like this. This is the rate, and this is the time when we go from here. We can see the time changing. So I drew out two of the pricing models. Bar, like I mentioned, it could be dynamic, so it could goes up and down and up and down again. So it's not like it might be a mountain hill. It might be just all the way up, but in the real world, probably not. But of course, you don't want all the way down, right? But for net rate or FIT, normally it's a flat rate. That means at this time, if I'm a travel agent, I'm selling the same room to a guest. This is your hotel selling rate. This is my net rate. If I'm a travel agent, these are my profit margins. So I'll show you an example for it. I categorize into A, B, C, D sections of it. 8 sections with selling rate and the differences to net rate, bar versus net. At A level, there's only 12% differences. Say if this is $100, this is selling 88. An easier calculation for it. So at this point, if you are an agent or you are a hotel partner, you want to sell 100, but you gave other 88. Is 88 able to sell? Depends. because with this agent, they have only 12% profit. They won't be able to promote your hotels, or they won't want to sell this much differences. But if you raise up to 120 and they're still at 88 or 98, then they have 22% gap. This is when the booking will coming from this net rate. Now you're thinking, so all I have to do is raise up my my selling rate, so my net rate can be generated from other channels. But remember, bar it's a selling rate open to the market. So when you're doing your rate strategy, you have to consider what are your selling rates. And this is normally the flat rate or the year-round rates that you provided to your agent or your other corporations. So at this time, which one will sell? We'll find out later. And at sea level, when the market is down like COVID-19 right now, the pandemic is here, so nobody's having business. What I can do is I have to drop down this rate to this level, say 70, but I provided a $80 flat rate in a year round. Will my agent able to sell this? No, of course they are selling here. Then come to the D section. If after the pandemic my business are coming back, I can raise up my price to 120, but I provided a 20% gap to my agent, to my to OTAs. Then they do the markup was 20% good enough, then should be selling both. So coming from this pricing structure, we understand bar can be up and down, net or FIT are flat year rate. Under circumstances or under the period of time, because of the margin that one agent to work with depends on hotel selling rate, it will comes from different channels or from different rate strategies about pricings. So like I mentioned, I have only 12% gap. So rather I'm selling this because I get probably more commission out of it. But at this time, if I sell this rate, I can have more incremental income or markups to sell to my guests. Why? Because I got this net rate only. But at sea level, of course, it's coming from this. But at D level, it could be both of it. So this pricing structure tells you how to monitor your rates and your yearly contract rates to the other agent. For more advanced systems, they can combine two systems or pricing models. Like Expedia, they can do bar, they can use the SiteMinder or say the Travel Click or Fast Booking channel managers to change your rates according to the time. As well, if you use this as a static rate, as a package, that means whenever you book this through tickets, even at this level, you set down $80 promotion or say the special rate, as long as they book through package, it will comes from $80. So it will be cheaper than 100 or 120. So this is when the booking will coming from this pricing. So when you're doing your rate strategy or revenue management, you have to understand your net rate means how much you can sell for the minimum for one room and one night at a certain package or longer days for 2 days or 3 days. But bar rate is something you have to go along with the market trends and time. So this is a brief example of how you understand the rate structures. Sometimes, but not regularly. Net rate, or we call it package rate, or we call it FIT, that combined with other services, it can be adjusted as well. But rather than this mountain up and downs, it probably just go down a little bit. Or if the market is good, it may go up a little bit. Depends on the seasonality. Or with different countries that you're acquiring more certain countries travelers from. Say like Taiwan, like Japanese. So we might drew down a little bit pricing for Japanese guests. Or we want longer stay guests by booking with packages like US because they're traveling very far from here for 5 nights above. I can do a little bit discount onto the net rates for the package. But meanwhile, if I'm getting better occupancy, I would be able to upgrade my bar rate to create a separation of the differences between bar and net. So this is how we control our pricing by occupancy, by the nature of the travelers, and also the way we wanted they stay at the hotel. Okay, so before we move on to rate strategy, let's have another short break.